Hi all and welcome back to the channel. I'm Dave Denton and today I'll be talking about this book called Rich Dad, Poor Dad by Robert Kiyosaki. This book is one of the all-time greats when it comes to learning about money and investments, and I can't wait to share a few nuggets of gold from this book. So without further ado, let's kick it off. So, lesson number 1, rich people don't work for money, they buy assets and let those assets earn money for them. If you rely on sweat equity, you'll avoid poverty, but you never rise to financial freedom. When the author talks about assets, he refers to anything that generates an income or will rise in value over time. Lesson 2, educate yourself about finances. Distinguish between liabilities and assets. Prior to reading this book, I would have said that my primary residence would be deemed an asset. You would have thought so. However, what I learned from this book after reading it was if you're paying a mortgage, then it's instantly deemed as a liability. What the rich will do instead is that they'll rent out any houses that they own. That way, any money they spend on it can be offset against your tax return. They will then rent out a house for their own living arrangements. Lesson 3, keep your day job. The goal is to have multiple streams of income to always give you options if one of them drops off. So an example of this would be to own a small side business alongside your 9-to-5 job. Another example would be to purchase a property and to rent it out if you're able to do so. Lesson 4, develop an understanding of the tax system in your country. Hire someone if needed. As you make more money, the cost of an accountant advising you on how to minimize your tax expenses will be worth their weight in gold. An example from the book is how the rich will put their money into corporations, as a corporation can spend their pre-tax dollars and then only get taxed on what's left. The average person obviously gets taxed first. Putting your business into a corporation also limits how much you lose if your business goes under. If your business goes under and the business is listed against an individual, then that individual will lose their possessions, all of their possessions, to pay for the loss. If, however, it's under a corporation, then the owner only loses the investment itself. Lesson 5. Always look at the bigger picture. When you choose a job, choose it based on how much you can level up from doing that job. If you want to learn sales, get a job at a call center. If you want to learn public speaking, get a job in a role where you're forced to speak publicly on a daily basis. If you enjoyed this video, please hit the like and subscribe button, and also drop any comments in the section below for any other books you'd recommend on the topic of money. I'd like to try and get a few more money related books on this channel going forward. Thank you all for listening and see you next time.